But challenges loom in the short term, including Shanghai's COVID shutdown, which Credit Suisse analysts say is hurting deliveries.
In recent quarters, it's been as high as 60% of their total volume. In April, there was minimal volume. In May, it was roughly at half pace. And so that's enough to really drive the cut to our estimates.
Well, they certainly seem to be hitting the ground running when it comes to reopening after that very brutal Shanghai lockdown, which saw them lose weeks of production time.
In this video, a Tesla stock analyst warns of a brutal Q2 after the Shanghai factory shutdown, more on Tesla's massive expansion in China, and Tesla stock rockets higher, closing the week up about 15%. And yep, I'm going to say it again, still, in my opinion, the bargain of the century. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price target, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store, so check out the links in the pinned comment below, and thanks for your support. Tesla stock today rocketing higher, up over 4.5%, closing at $737.12 per share. Over the last 1 week now, Tesla stock up about 15%, around $100 per share. And I still believe this is dirt cheap with a long-term investment horizon. In fact, I'd go as far as to say it's the bargain of the fucking century, in my opinion. The Nasdaq 100 today moved up almost 3.5%. Amazon stock up over 3.5% today. Alphabet stock up over 5% today. Apple stock up 2.5% today. The ARK Innovation ETF up over 4% today. For some strange reason, Lucid Motors down 0.5% today. Rivian stock up 0.1% today. And everybody's favorite representation of the bell curve, Nikola Corporation, down just over 1%. And if Tesla stock is the bargain of the century, Nikola stock may in fact be the polar opposite of that. And now, as the wave of analyst price targets on Tesla stock continue to be slashed, won't age well, let's hear from a Credit Suisse analyst about Tesla's brutal Q2.
Had a great week, despite a price target cut from Credit Suisse, writing that the long-term bull thesis remains intact, but challenges loom in the short term, including Shanghai's COVID shutdown, which Credit Suisse analysts say is hurting deliveries there.
This is a fairly colossal understatement. My own estimates suggest that in total, Tesla will have lost about 100,000 units of production and deliveries. As we know, they sell everything they produce, so they're effectively equivalent in Q2 as a direct result of the insane, futile, fascist, inhumane lockdowns in Shanghai. How do we arrive at this figure? It's quite simple. It's not just the period of complete shutdown where zero vehicles are being produced, which itself accounts for over 50,000. There's also the slow ramp back up. You don't just click your fingers, press a magic button, and suddenly you're back to your high volumes. To put this in context, let's just round it down and say it's around 90,000 vehicles just in Q2. Last year, in total, Tesla delivered around 900 or so thousand vehicles. So in a single quarter, Tesla has lost about 10% of last year's full year production. If these same losses were sustained in every quarter, that would be about 40% of last year's volume. So this is significant. It is going to hurt Q2 numbers quite substantially. In addition, we've got a massive Bitcoin impairment that's now approaching $500 million. This isn't an actual loss, but it's a paper loss. This is temporary. Investors won't pay too much attention to this. But it's quite evident at this point in time, with 2 new factories ramping up, plus a huge amount of lost production in Shanghai, plus a Bitcoin impairment, this is likely to be an extremely brutal quarter for Tesla. Of course, if the stock market is rational, which might be asking way too much, let's be honest here, this shouldn't have any impact on Tesla's stock price. These are all temporary bumps in the road. The long-term thesis remains unchanged. But be warned, Tesla stock investors, the numbers in Q2 are not likely to be amazing, at least by Tesla's standards.
Joining us now is the analyst behind the call, Dan Levy. Dan, what are you looking at that gave you that kind of insight on China today?
Thank you so much for having me, Sarah. Yeah, we've known that throughout the quarter, the Shanghai shutdown has limited Tesla's production in Shanghai. Shanghai is a really important factory for them. In recent quarters, it's been as high as 60% of their total volume. In April, there was minimal volume. In May, it was roughly at half pace. And so that's enough to really drive the cut to our estimates.
Although last quarter, there was a lot of hand-wringing about the China shutdowns in Shanghai and didn't turn out to be that big of an issue. And in fact, some of the commentary on the call was pretty bullish on China.
Yeah, last quarter, they didn't see much in the quarter itself. It was still a fine quarter for deliveries. Really, the big positive in the quarter was the margins. But this quarter, you started to see more of an impact on the volume. You'll also see the appropriate margin hit because that is a very high margin facility. And then on top of that, there's also some margin impact from the ramp of the new facilities in Berlin and Austin.
This is a great and very important point. Tesla's gross automotive margins are going to be fairly low compared to recent quarters, assuming A, Shanghai is the most profitable, aka high margin facility currently producing and delivering vehicles at volume. Less production from there, that's going to drag margins down by default. In addition, Austin and Berlin ramping up, this is going to be a massive but temporary drag on margins as well.
I'm looking at your targets here. You still expect this stock to rally, to outperform. You've got a $1,000 price target. You take that down from $11.25.
Interesting to note here, even as analysts are slashing their price targets for Tesla stock over the next 12 months, most still show massive upside from where we are today. Keep in mind, it was just a few days ago that Morgan Stanley slashed their Tesla stock price target from $1,300 per share, $1,200 per share in the base case, with their bull case remaining unchanged at $1,600 per share. And now Credit Suisse slashing their target down to $1,000 per share, previously $11.25, still massive upside from where we are today. And of course, I completely agree. I still cannot fathom how in the flying Tesla stock is in the $700 today in mid-2022 as I record this. Don't get me wrong, I'm not complaining, I'm buying the stock hand over fist, the cheaper the better. But as I've mentioned previously, a series of totally irrelevant events have artificially hammered Tesla stock into the ground. Interest rates, macro environment, recession fears, war in Ukraine, Elon selling Tesla stock to exercise options, Elon's offer on Twitter, on and on and on and on and on. How many of those things have anything to do with Tesla's execution or EV adoption? None. Zero. None of them are at all relevant, yet I believe these have massively depressed Tesla's stock price. Now, I could be wrong, but I suspect at some point the market's going to figure this out, and it'll probably occur over a relatively short period of time. I hope it doesn't. I want to keep buying as cheap as I possibly can, as long as I possibly can, but I would not be counting on that.
Talk us through that decision.
Yeah, we are positive on the stock, and really the key message here is that even with some of the near-term noise that you're seeing around Shanghai and the shutdowns, I think the long-term story is very much intact.
Completely agree. As I said earlier, all of this stuff is short-term, temporary, and totally irrelevant to the long-term thesis, Tesla's technological advantage, their compelling products, and so on.
EVs are really the mega trend for autos, and this is the best stock in autos levered to EVs. They have a large lead over others, and in fact, we think that even with all the supply chain challenges, this just widens their lead over other automakers.
Absolutely. I mean, I've said this a trillion times. It's nice to hear a stock analyst pointing out the same facts. There's a few reasons as to why the supply chain challenges, logistics issues actually benefit Tesla relative to other automotive manufacturers. Tesla is more resourceful. They manage to find a way to get stuff done when other automotive manufacturers just go, oh, well, I can't get chips, I guess we have to stop making vehicles. Meanwhile, Tesla's like, that, let's source some alternatives and just write new firmware and keep production running. Tesla's lean, efficient, and resourceful. In addition, on average, the engineers just have bigger brains, which means they can solve more challenging problems. This is why Tesla has been least affected by these global issues. They haven't been unaffected, just they've been able to navigate these turbulent waters much better. This means that Tesla's lead relative to other automotive manufacturers is accelerating, despite the fact that overall there are some massive challenges. This is underappreciated. The exact same thing happened earlier during the scamdemic. Did I pronounce that right? Anyway, I called it on the YouTube channel. Everyone thinks the world's ending. I'm like, you do realize Tesla's just going to pull further ahead during this time. They're supply constrained, not demand constrained. They continue to have robust demand and compelling products, high margins. They're growing at a crazy rate. This just allows Tesla to move further ahead. In short, every time there are global challenges affecting everyone producing vehicles, this just gives Tesla a further opportunity to pull even further out into the lead. During good times, sure, everyone will make progress, but during challenging times, the slow and weak members of the herd are going to become someone's lunch.
Given how well situated they are with vertical integration and also with their prior experience in EVs. We cut the price target because there is a discount rate component to our valuation. Obviously, rates are rising, so that's really what drove the cut to our price target, but we still think attractive upside ahead, and there's still a lot of growth here. We think this is the best leverage story to EVs in our coverage.
And I'd take that a step further and just say that Tesla stock is the only EV stock, really.
Pretty bullish. Dan Levy. Dan, thank you, from Credit Suisse. Dan, it's up 13% this week. It's had a good week. It's still significantly off the highs, about 40% on Tesla. What say you?
All right, please, Dan, I'm begging you, man. Don't say anything dumb. Please, just for once. I don't want to roast you again, please.
Yeah, so if you look at the last few quarters, Sarah, Elon Musk usually sends out a rah-rah email talking about how difficult the quarter has been, and if we really kind of hunker down, we can make the quarter. He's done that basically every quarter for the last 3 or 4, and the stock usually rallies off of that. So we're rallying a little bit after being down more than 45% at its lows just a couple weeks ago, and I suspect it continues to rally into quarter end. Then we're going to get deliveries. I'm not nearly as optimistic as Dan Levy, but I don't look at the company the same way he does.
Got to give some credit here to Dan for acknowledging that he doesn't look at Tesla the same way as some others, and I think what he means by that is that when he's looking at Tesla, his eyes aren't open, so credit where it's due. At least he's aware of this.
I think they had a really bad week. I think that kind of money furnace comment that he made about the gigafactory in Austin and Shanghai, and not to mention what's going on in Berlin, I'm not sure it's the thing that a lot of investors think that they feel comfortable about paying for a $750 billion market cap company. I get it. It's a levered play towards EVs. I think there's a lot of competition.
Man, I was thinking we might almost get through that entire clip without Dan saying anything completely idiotic, but there it is. A lot of competition. Not sure where it is, but apparently it exists or it's coming. Still waiting. As for the comments about the money furnace, I mean, this shit is hilarious. This is some real CNBS analysis here. Elon Musk points out something obvious. Factories that aren't fully ramped to full capacity, clearly burning insane amounts of money. This isn't negative, this isn't bad, this shouldn't have affected Tesla stock invest. It's obvious. I mean, hello. Every time Tesla ever builds a new factory, it's going to be burning billions and billions and billions of dollars until it's fully ramped up. That's how manufacturing products at scale works. In fairness to Dan, obviously, the fascia shutdowns in Shanghai were unexpected. Challenges with the 4680 cells, however, ramping and the structural battery packs were not unexpected, but the Shanghai lockdowns did fuck Tesla's plan B with the 2170 cells. So yes, Tesla is currently burning a little bit more cash than usual, but this kind of stuff, these kind of comments from Elon Musk will continue to pop up in the future. He says things that are true and accurate, logical, reasonable, and to be expected. But many investors, and by investors I mean people who like to gamble short-term on stocks, hear a comment from Elon Musk like, "This factory's a money furnace, burning lots of money, the sound of money on fire," and then panic and sell their Tesla stock.
And I gotta tell you, I think there's issues with China demand ultimately.
Oh, dude. Does anyone watching know Dan? Like, I think we need an intervention here. The guy just needs to give up or stop talking about Tesla. There's issues with demand in China for electric vehicles or Tesla vehicles specifically. What planet is this guy on? Seriously? I guess maybe Dan should get an urgent message to Tesla, given the fact that within 12, 18 months, their capacity in China will have more than doubled to over 2 million vehicles per year. Obviously, if there's some issues with demand over the longer term, maybe it'd be a good idea for Dan to let Tesla know, hey guys, stop the expansion plans. You don't know what you're doing. There's no demand there. Otherwise, you'll have this capacity and won't actually be able to produce and sell the vehicles in China. So just a quick recap so far. The competition coming prematurely all over itself, and there's no demand in China over the longer term. What else you got for us, Dan? One more idiotic comment and we'll have completed the trifecta.
And also, how much demand do you think is happening out of that Berlin?
We did it. 3 from 3. Just give up, Dan. Apparently, he has some concerns about whether or not there's sufficient demand in Berlin, in Europe, for Tesla-made vehicles. I'm impressed. Within the span of 30 seconds, Dan has self-immolated 3 times. And remember, Dan, the internet never forgets. I look forward to revisiting this clip in about 3 or 4 years when Berlin is producing 2+ million electric vehicles per year and Tesla is selling every single one of them. Someone set a reminder so I can roast Dan again.
And, to me, I just don't think it's a great story right now. And I think Elon Musk seems to be very distracted with what's going on with Dogecoin, with Twitter, and whatever else is going on.
Sometimes I can't tell if Dan is legitimately brain dead or just joking around and just trolling me. Like, does he really think the price of Dogecoin at the moment or Twitter, what? Surely he's just having a go, right? Or maybe he's unaware that while Elon has been CEO of Tesla the past decade and a half, the same has been true. He's also been CEO of SpaceX. Never mind Neuralink, boring company, half a dozen kids. Doesn't seem to have been too distracted in the last 15 years. I think Dan may be projecting his own limitations onto Elon Musk. And now, lastly, a few more comments in the mainstream finance media, this time about Tesla's massive expansion in China. The market in which there is insufficient demand and Tesla really shouldn't be expanding, and according to Dan the man.
Can we call this a pretty ambitious sort of target, according to your team's reporting? What does this tell us about Tesla's ambitions in the mainland?
Well, they certainly seem to be hitting the ground running when it comes to reopening after that very brutal Shanghai lockdown, which saw them lose weeks of production time in what is becoming an increasingly important market, not just the Chinese market that they're servicing, but the huge number of exports that Tesla is doing from that Chinese factory to other parts of the world. So what we are seeing is, as you said, shutting down those lines for a couple of weeks into early August so that they can upgrade them and be able to double that original planned annual output estimate to 1 million cars a year.
What was the rationale behind this, and what is the company, or at least what your sources are saying on why they're doing this?
I'll take that one. Despite what Dan would have you believe, it's because A, China is the most important vehicle, aka electric vehicle, because that's the only vehicle that matters in the future, the most important vehicle market on planet Earth, the fastest growing vehicle market on planet Earth. And yep, that's right, there's an incredible amount of demand for compelling electric vehicles in China. That's why Tesla's expanding massively. In short, if you want to win and dominate globally, you must win and dominate China.
Well, they really want to feed that market, right? Not only do you have huge demand for the cars in China, which is the world's biggest EV market, the world's most mature in many ways, but they want to be able to ramp up exports. Not just to Europe, which that Chinese factory has been feeding quite consistently, but to other parts of the world. China is becoming a very key part of Tesla's sort of global picture when it comes to providing cars. And as we've seen, not just with Tesla, but with other EV companies, demand is definitely outstripping supply right now.
Couldn't have said it much better myself. I needn't have barbecued Dan for his idiotic comments. I should have just played the clip from Emma there, pointing out that demand in China is insane. It's the world's most important and mature and largest EV market. But hey, I guess I jumped the gun. Now, there is a very important lesson in today's video, and no, it's not that Dan's an idiot, although that is also true. It's that there's still a large number of people, supposedly intelligent people, experienced stock investors, who have questions about global demand for electric vehicles, who have questions about demand for electric vehicles in China, who still probably think that they're going to be driving around an internal combustion engine vehicle in 2042. I personally believe that if this is your belief, you're probably not going to be making intelligent investment decisions over the next 5, 10, 15 plus years. But hey, you do you. Time will pass anyway, and we'll figure out who was right. And the other important takeaway from today's video is, despite the fact that Tesla's Q2 is going to look horrendous on paper compared to previous quarters, every one of the factors impacting Tesla's Q2 numbers are temporary and irrelevant over the long term. And the final takeaway, even the Wall Street analysts who are slashing their Tesla stock price targets by more than 10%, still with price targets 30+% above where we are today on average. And I think they're all massively underestimating where Tesla's going to be in around 12 months. Of course, short-term predictions on stock prices are fraught with danger. I don't know what's going to happen, but I don't really care what's going to happen. All I care about is, am I buying Tesla stock today cheaper than I think it'll be in the future, and by how much? As I've said 4 trillion and 3 times now, I cannot find a better risk-adjusted opportunity in the stock market with a long-term view than Tesla stock in the $700 range in mid-2022. Just how much further can Tesla stock go from here? Well, head over to Patreon with the card in the corner or the link in the pinned comment to access my 10-year Tesla stock price targets, bear case, base case, bull case, hyper bull case, plus a weighted average price target. Even my base case for Tesla stock next 12 months is almost double where Tesla stock is currently at. Of course, I could be wrong, and I hope I'm wrong, because as I've said, the cheaper I'm buying Tesla stock, the happier I am. But for the millionth time, don't say I didn't warn you. I'm Stephen Mike Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel, and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.